This is Eric Muathe with Muathe.com with another quick educational video. This one is gonna be a little bit different. If you've been following me, it might be a concept you are aware of, but if you're new to this channel, new to my videos, then the concept is most definitely gonna be new to you. Now, so that we can save time, I'm gonna direct you, if you want more information, to consider watching this sample playlist. The full playlist is on my website, but this sample playlist should be sufficient. It's gonna be linked in the description of the video for more information about this concept. So it's a concept that needs some explanation, but I would suggest watch this introduction and then go to the playlist for more information. So this is the S&P 500 daily chart. Now I'm gonna take this area here. I want to show you how, if you take the following areas, take this low and that high, take this low here and the current high from Friday, today being a Monday. If you notice, they are almost equal distance. This here is almost equal in time and space to this move here, almost equal in time and space. And what this concept, which I call the wave cancellation, is telling us, or telling me at least, is this move was balanced out by this move. In other words, both moves are designed to confuse, and because they balance out, there's a way to almost get rid of this confusion by using the wave cancellation concept. Now I'm going to use the RSI to explain this, how this can be done. So if I take a line right there, and what we're going to do here is, let me explain where this line comes from. This line comes from this recent break. Now this is the S&P 500 daily, 6 months daily. Now notice how above the blue line we have a inverted V right there, which has equal time and space to the other component, which is below the blue line here. Equal in time and space. In other words, those two cancel out. It's another way of saying that a lot of the things that happen in the market should not be there, but they are there because the market can't just be flat, not doing anything. So in other words, those two areas cancel out. It's another way of saying that this, we could have done away with all of this. If you understand what the market is trying to tell us, this area balances out with this area. Bear with me. I'll explain why it can be used to gauge the next direction. So if we take the blue line, what the market wanted to do is go flat between here and here, but it chose to play this up and down game as a way of fun and to confuse. So let me explain how you can use this. If we draw the line again, it means that whatever direction happens now, let's say if the market continues trading with the RSI pointing down, what this is saying is that the next swing trade direction is down. Because remember, as we've pointed out, this period was cancelled out by this period. So the next direction is pointing down out of that phase. Otherwise, the market can clear above this blue line to signal that the next meaningful direction is to the upside. And of course, since we are slightly above RSI 50, expect a big down day when we drop, and if we drop below RSI 50. But that's digressing a little bit. And again, more information, this is just a summary, can be found on that playlist. Now, there is another way to arrive at the same conclusion of wave cancellation. All we're going to do is draw the previous topside resistance line and extend it out. Now you see here, when we moved above this line here, the previous RSI topside resistance, previously connecting all these tops, and there, and there. Anyway, we clear that line, and we have this nice uptick in the S&P 500 to all-time highs. We use the same line for support, bang, support, bang. And then we have another wave cancellation example above that area, signaling this move, balanced it or balanced out eventually by this recent move, which is this action here. So what you do from a trader perspective, you take the wave cancellation area and understand that that should have been a flat area. In a way, you want to ignore it, and it's what comes out of this, which right now we are pointing down from this line. Things are pointing down. The next swing trade is to the downside, and to correct this to the upside, you'd have to clear this line. So from a swing trade perspective, after the wave cancellation, you can determine your next trend. So let's say we have this movement here, wave cancelled out. So let me draw it. So let's say you have this RSI movement. Let me draw it a little bit thick. Something like that. But what we are saying is this area is equal in time and space to this area. So in a sense, you understand that actually what the market did was play games, but in truth, with the balancing action, you account for the fact that this was just gamesmanship, shouldn't be there, and it's what happens after that that gives you the next correct swing trade direction, either rejection for a swing trade down, or you can get movement out of this wave for a swing trade to the upside. Yes, not the easiest concept to understand, but can be useful. Besides, it also goes to show you how markets are more complex than they seem on the surface, and explains why a lot of the times people find themselves on the wrong side of a trade. Why? Because these charts are full of lots of cues, visual cues. For more information, take a look at the links provided in the description of the video. Eric Muathe, Muathe.com. Love, light, light, love. Namaste.